Nothing brings people together quite like Team USA at the Olympic Winter Games. From NBC Universal's iconic storytelling to the innovative technology across Xfinity and Peacock, Comcast brings the Olympic Games home to America, sharing every moment with millions. When Team USA steps onto the world stage, people aren't just watching, they're cheering together. This winter, everyone is all on the same team. Comcast, proud partner of Team USA.
Welcome to Fintech Insider Insights from 11FS. I'm Kate Moody, and today we're cutting through the hype to talk about prediction markets. You've probably heard the term. They're huge in the US, but what exactly are they? How do they work? And why are so many people suddenly paying attention? In this episode, we'll explore the rise of prediction markets, from the standalone platforms building them to the financial apps starting to embed them, and ask the big question: could they become the next major category in financial services? At first glance, it's easy just to dismiss this as another form of betting, another internet-native trend dressed up with charts and probabilities. But here's the thing: scratch beneath the surface and prediction markets are raising some genuinely big questions about how we price information, about whether crowds can outperform experts, and about where the line really sits between investing and gambling. While this space still feels niche, part finance, part internet culture, there's a growing argument that these markets could become something much bigger, a new kind of asset class, a decision-making tool, even a signal that institutions might one day take seriously. But there are challenges, big ones. Regulation is murky, the user experience is designed to be engaging, sometimes uncomfortably so, and there are real questions about who these products are actually for: informed traders, curious consumers, or just people chasing a quick win. So let's get into it. I'm really excited. I've been joined to unpack what's real, what's hype, and what comes next in prediction markets by a really awesome panel. So let's meet them. First up, it's Emily Nicolle, digital finance reporter at Bloomberg. How are you, Emily? Great to have you on the show as always. Would you mind giving our listeners a reintroduction to yourself, please?
Yeah, I cover digital finance, crypto, and prediction markets for Bloomberg. I've been on various 11FS pods quite a few times over the years when I used to write about fintech more than I do now. And I'm really happy to be here to talk about prediction markets today.
Awesome. Well, welcome back, and very excited to pick your brain. And next we have an exciting Fintech Insider debut for Kate Knibbs, senior writer at Wired. Welcome to the show, Kate. I mean, always great to have another Kate on, personally. But could you tell us a bit more about yourself and your work at Wired, please?
Absolutely. So I'm a senior writer at Wired. I've been there for 6 years. I started on the culture desk and then jumped over to business, but I still sort of see everything as a culture story, including prediction markets. And I cover, prediction markets, future of finance, and then AI and how it's shaping the media industry. And yeah, there has been so much news about prediction markets in the past few months. I don't even know how we're going to cover it all. So thanks for having me on to start digging in.
Well, we're going to give it a good shot for sure. Okay, well, on that basis, let's jump in. So, I suppose first up, there's been a lot of chat about prediction markets, but we have quite a broad audience, right? Some people might be coming across this term, or might have only heard it recently, or coming across it for the first time. So, Emily, how would you explain what prediction markets are to somebody that maybe is just coming across this term for the first time, or just doesn't really understand the space very deeply?
So prediction markets are platforms that allow people to bet on the likelihood of a real-world event occurring. They're usually structured as yes or no bets, so you can buy the yes side or the no side, and each side has odds that are determined by what people are trading at that point in time. So that's meant so that they're meant to reflect the implied probability eventually. They're usually priced anywhere between 1 cent and 99 cents, with the idea being that if it resolves in the favor of yes or no, whichever one is the right outcome, will go to $1 and you get a full dollar payout at the end of it. I use the word dollar because these are really only markets that are available in the US or kind of in dollarized form at the moment. We don't really have them in the UK. What we do have, though, is we have a structure where companies like Betfair, for example, have a model that is Betfair Exchange, which is different to the main Betfair app. And this is a gambling product rather than a financial product, but it's still structured like prediction markets where you're trading with another person rather than trading against the house or the company like you would in a gambling situation or a casino. In theory, that's supposed to make them more fair because there's no house to win and, the odds are set by the market rather than by the company. But, there are a whole loads of other issues, which I'm sure we'll get into with prediction markets that can make them unfair. So.
Yeah, no, brilliant. That's a great starting point. I mean, Kate, anything you'd add from your perspective in terms of like a starting definition for people to get their heads around?
Yeah, so a lot of people who are participating in these markets tend to see them as gambling tools more than financial instruments because if you're going to place a bet in a traditional sports book and you want to put $500, say that Michigan State is going to win a March Madness game, you give FanDuel or DraftKings or any sports book the $500, they set the odds, and then you see what happens. It's not that different when you are deciding to put money down on the outcome of a sporting event on a prediction market like Kalshi or Polymarket. You could take $500 and put it on Michigan State winning. Under the hood is where the difference takes place because, as Emily was saying, you are actually purchasing an events contract, which is a type of future contract, binary yes or no. And so in that sense, you are not placing a bet, you are making this financial industry purchase. And so even though on the surface it looks the same to a lot of retail users, the platforms will emphasize that like structurally they are very different.
Yeah, no, absolutely. And my understanding, again, we were sort of talking before recording that everything changes like in this industry all the time. So maybe this won't be the case by the time we go live. But at the moment, prediction markets are currently regulated in the US by the Commodity Futures Trading Commission, or the CFTC, which is the federal agency that oversees the derivatives market as well. So how big an impact is that currently having, Kate? Like, is in the they are being regulated as a financial product, but as we've sort of already touched on, it kind of feels like they sit in this really grey space between financial products and gambling products. So, how important is the underlying regulation?
So right now there is this massive fight going on in the United States over how to regulate these platforms. The federal government's position, which is the CFTC is, as you said, the federal agency regulating it, is that the CFTC has jurisdiction. These are financial instruments. They should be regulated as such. But then there are all of these states like Nevada and Massachusetts and Ohio and Arizona, where the state regulators and state gaming commissions are fiercely fighting to change that approach. And they say that these are actually gambling platforms and they need to abide by state gambling regulations. And so there's, I believe, definitely over 40, I believe over 50 ongoing lawsuits on this subject where the states are suing the prediction markets. The prediction markets are preemptively suing the states. Arizona actually last week just filed criminal charges against Kalshi. They were misdemeanors, but arguing that it was illegally operating a gambling product. And so there is this giant back and forth. There's not consensus. It's a bipartisan mishmash issue. So you have conservatives on both sides, you have liberals on both sides. And we really don't know how it's going to play out. So at the moment, there's actually been this huge rush of different startups entering this space, getting licensed by the CFTC. It's like a really exciting moment for people who want to be in the prediction market industry, but it's also a really perilous one because it might all come crashing down.
No, that's hugely helpful context. And Emily, I suppose from the perspective of, traditional financial markets, how are they looking at the rise of prediction markets? Are they excited to have a new potential asset class, or do they see this as a threat? Like, kind of what's the current vibe there, would you say?
In financial services, it seems like they're most excited about this. Like if we speak to firms on Wall Street, hedge funds, banks, even just like market structure companies like ICE, for example, which owns and operates the New York Stock Exchange, they've taken an investment in Polymarket. These are companies that are excited about what prediction markets can offer them because event contracts can be on anything from an Oscar winner to a sports game to what the weather will be in New York today. These are all options that they can use for hedging instruments. So if you're one of the examples that we like to use at Bloomberg is if you're an ice cream business and you need it to be hot weather in the summer because that's how your business does well, you can hedge against the risk of there being cold weather by buying shares on Kalshi or Polymarket that there's going to be cold weather in your area at that point. So if cold weather comes, you make a profit, but while your main ice cream business is suffering. These are the kinds of opportunities that main Wall Street firms see as a way that they could use in the market for various ways, whether it's they want to hedge their exposure to certain types of companies in the stock market, they want to hedge their exposure to certain kinds of commodities. That's what prediction markets offer them. On the flip side of that, we have the traditional sports books that see this, as Kate was saying, like as a major threat. But a bunch of them have kind of tried to get into this themselves. So if we take FanDuel, for example, which owns quite a few of Flutter Entertainment, which owns FanDuel, which is one of the big sports betting apps, they've launched prediction markets in the US in every state where they didn't have sports books before. So they're able to cover the whole country now by having prediction markets in some states and sportsbook in another. That's one of the ways in which they're all trying to kind of get in on this race while also helping kind of manage their own bets, I guess, in the state versus CFTC issue that's currently ongoing.
Yeah, it is such a fascinating platform. Like when you go onto any of these platforms, I just always find the first page mind-blowing. Like just the kind of like, obviously they have the kind of different splits by different kind of sectors or topics or whatever. But when you just kind of look at like the trending page, you've got literally kind of, the price of Bitcoin next to kind of the outcome of major geopolitical events versus like sporting events versus the weather. It's just this kind of crazy mishmash of all the possible things. So I can see why from a customer perspective, I'm not even interested. I'm not a gambler, but even I was kind of intrigued by it. It feels like quite a compelling proposition. Like, do we see that, Kate? Are you seeing this as sort of becoming like a more mainstream platform? Like, are we seeing kind of everyday customers starting to use this, or is it still kind of relatively niche, kind of mainly being used by particular cohorts of consumers?
So it is relatively niche compared to like sports books. I was just talking to this firm that had run a poll on Gen Z users, and only 12% of the respondents knew what a prediction market was. So like when you're talking to just anyone off the street, they're still nascent. They're not something that's totally mainstream, but they are absolutely booming, and their growth is incredible, like hockey stick, exactly what you'd like to see. So it is something that's catching on with retail consumers. And then as Emily was talking, like there is so much excitement in the financial world about these platforms. And we are seeing institutional players entering the space at such a rate that honestly, if I was giving advice to someone who wanted to just play around with these as like a hobbyist, I would say, just so you know, you're like going up against traders at quant firms who think that you're kind of an idiot for participating. So like just be wary. These aren't, they might seem like spaces for retail players, but I don't know if that's going to stay that way.
And I think like Kate, you were kind of talking about your experience of when you go on the website and what you see. That is what most people in the UK, in Europe, other places outside of the US, that is going to be their experience of prediction markets right now, because these aren't platforms that are available to you very easily in those countries. Kalshi only accepts users that are registered in the US, or they now have one arrangement in Brazil, but that's about it. Polymarket doesn't conduct identity checks, so you could technically be anywhere, but they do geo-block certain countries. So a lot of people choose to get around that by using VPNs to obscure their location. But technically, the UK, for example, is one of those locations where you shouldn't be allowed to trade on Polymarket. That does mean that while this phenomenon feels huge and we see it all the time, we hear people talk about it all the time, it's very much an America-centric idea at this point in time. We don't really have regulation or structure or accessibility for prediction markets in other countries, at least not in kind of a regulated, safe manner that you'd expect from what we're hearing about in the US.
Yeah, no, I think that's a really important call out. Yeah, okay.
Oh, and like to that point, it is totally an American story. This actually just is such a crystallization of so many themes about the corrosion of American culture to me. But that said, one thing that a lot of people don't realize is that Kalshi is licensed in the US. Most of Polymarket is actually still offshore, even though it has this strong U.S. presence. It's headquartered in the U.S. There's only a small little, like, invite-only version of Polymarket that's available in the U.S. Most of the trading volume is happening internationally, and people are using virtual private networks to access it. And they also, in that version, they use crypto wallets. So it's this, like, amorphous international entity that gets confused for something very similar to Kalshi. I think they're quite distinct, actually, in that way.
Yeah. For crypto listeners, if you think about it, like if we think about the way that Binance and Binance US is structured, or FTX and FTX US back in the day, like we had these like two separate venues. One is like the international hub that is huge, has all the volume, it's a total free-for-all, maybe rules are a little bit more relaxed. And then the regulated US venue that has almost no volume at all. That's exactly what we see with Polymarket.
Yeah. And again, obviously, it feels like the rise of prediction markets and the continued rise of crypto are sort of connected, right? Like these are very interdependent spaces. Is that a fair assessment, Kate?
Yeah, I see this very much as an extension of the story that crypto started telling, and like crypto, NFTs, this is the financialization of everything and wild west of money, and it's all, and you see a lot of the players in the prediction market space emerging from the crypto world.
Yeah. And obviously, I think prediction markets got a lot of attention in the aftermath of Donald Trump's re-election. Some people sort of saw them as being a much more accurate measure of that political outcome than more traditional polls. Are these really useful measures, Emily? Like, are these actually going to help us to predict real world events, do you think?
There have been some cases where they've been extremely accurate, right? So if we take the election, most of the markets on Polymarket, I don't know as much about Kalshi, but especially on Polymarket, they called almost all of the races more accurately than the polls did. Months before the election happened, it was on Polymarket where Trump was forecast to win, while the polls were saying it was going to be Kamala. So in that aspect, they were very accurate. And on economic data, we've been shown they're very accurate as well. So recently, there was some research done externally that the Federal Reserve then republished about how Kalshi odds for economic data in the US was actually more frequently accurate than normal pollsters and forecasters that we used to rely on. So there is kind of wisdom to show that these things can be more accurate. On the flip side, though, there are times when they're not that accurate. And this usually tends to be in markets where we have a lot less information or there's a lot less liquidity being put into them, because the less volume that a market sees, the less crowd that you've got going into it, the less wisdom you're going to get. So if we take, for example, some of the more recent awards shows, they wouldn't get every single category right. There would be at least kind of like a third that were wrong. These are examples where like maybe they're not markets that are economically significant, but it does undermine the overall argument that these things are more accurate than, or have a really good ability to forecast than other methods that we used previously.
Yeah, so I'd agree that they're, interesting and helpful forecasting tools in a lot of circumstances, but fallible. But when Emily was specifically talking about the Oscars market, one thing that happened in the aftermath of the Oscars, I think, points to the fallibility, which is there was a tie at the Oscars, which is really, really unusual. And Kalshi and Polymarket resolved those markets in different ways and pissed people off in different ways in the way that they resolved them. Kalshi, you had to have selected tie, which like very few people did, because I think there have been 7 ties in the history of the Oscars. Polymarket had this fine print that said if a tie occurred, they would resolve the market by alphabetical order. And so only one of the 2 films that won resulted in people profiting when they had selected it. And so in both scenarios, a lot of the people who had bought these events contracts were upset, and it sort of underlined that these are spaces where, like, you're buying a contract on what the outcome of an event would be, and the underlying assumption is that there's going to be this, like, clear subjective truth, and that doesn't always work out because how these individual companies define what happened is the be-all, end-all. So it was just a very interesting and telling case of how what the users think is the truth and what the platforms think of is the truth can be different.
Yeah, no, I think that's a really, really interesting example. I guess, I mean, I'm quite an optimistic person, right? So I'm always kind of looking for like the positive spin on things. And one thing maybe some people do talk about when they talk about prediction markets is this a slightly more accessible way for people that maybe don't understand some more of the more complex investment products? Is this a more accessible way for people to kind of grow their money? I mean, Emily, how do you see it? Do you think people are engaging with these types of platforms to grow their money, or do people just want to make a correct prediction? What do you think is driving consumer engagement here?
I mean, it comes back to the argument about whether this is investing or gambling, and depending on who you ask, you get a different answer, right? So it depends on who you talk to. I think, though, what's interesting to note is that there has been some analysis done about how profitable these things can be, especially for traders who are at the lower end of income. So those who invest lower amounts on the platform, kind of less than $10,000 in a portfolio, they tend to be wrong more often than not. I think some data that came out this week kind of showed that mostly they tend to have a median return on investment of about -8%. So they're more often losing money than they are winning it. But if you're somebody who invests a lot of your money on these platforms, so that you're trading on them more, you get used to how they operate, you know how these kinds of things are structured, you know where you can spot inefficiencies, they often tend to be profitable. So it depends on how you approach them, but it definitely is not a straightforward answer in any sense. And these are still very complicated financial instruments at the end of the day. No matter how you dress up the financial the window dressing of what you're looking at, with it simplifying it to be yes, no, a set price, all of this. As Kate was saying, these are markets that have rules. They're markets that have differences between each one of them. Linguistic nuances are something that catch people out all the time in these markets. If you're not being careful enough to read them, you're going to get caught out too. And it's happening a lot at the moment.
Yeah, no, absolutely. And we're now starting to see, obviously we've had platforms like Kalshi that have been very, very successful kind of in their own right, but we're now starting to see prediction markets become embedded into other platforms. How do you think how has that already changed the game, Kate, and what do you kind of see as the main things to watch out for as we move forwards?
So they've been embedded in a bunch of different financial platforms, which just speaks to the appetite for institutional players to participate. And I think that is going to basically tilt these markets in favor of these savvier participants even more than they already are tilted. I think it's kind of going to make them a little hostile to retail users who want to make money. If they're doing it just, to speculate for entertainment, they'll be fine. But that's going to change the dynamic, I think. One big trend that we're seeing is media companies striking deals and partnerships with these institutions. And, at the Golden Globes, there were prediction market odds shown. CNN and CNBC already have deals with prediction market companies to embed their market information in their platform, sort of like tickers. And I suspect we're going to see a lot more enmeshment here. And in, I don't know, in one sense, it's I do think that there's use for them as forecasting tools. I don't think that they're something that we need to just pretend don't exist. But I do worry when it comes to as Emily was saying, that they're financial instruments that in linguistics matter. We've already seen polymarket bettors freak out at a journalist for writing a story that ended up crashing the markets that they had wanted to profit off of. And I think if we end up getting more institutional buy-in from media companies, because Polymarket and Kalshi will also sometimes specifically say this market will resolve upon 5 or 6 media companies producing stories that confirm one outcome or another. I'm just envisioning a world in which, I'm writing a story about Meta earnings, and depending on how I word the story, it could change the outcome of the market. And then if Condé Nast was to enter into a partnership with one of these prediction markets, there could be, an editorial directive put upon me to word it in a certain way. Just want to be clear, Condé Nast does not have a deal with these companies. That's not happening right now. But just hypothetically, I can see this happening. And it's a little scary.
Yeah, no, absolutely.
And we've already kind of seen this, what you could argue is manipulation play out. So not necessarily from the media companies, but we had an incident last year where we were listening to the Coinbase earnings call, and the CEO of Coinbase, who's kind of coming to the end of the call, and he was and I've just been told there's a prediction market about what I'm going to say on this call, so I'm just going to rattle off a few words here. And then he listed a bunch of them: Bitcoin, Web3, blockchain, all the ones he hadn't said yet. And on platforms like Polymarket and Kalshi, traders were betting on whether or not those words were going to get said. And so once he started rattling them off, those things went to yes, and those people won a lot of money. Vice versa, people who had bought the no on those words lost money. But it goes to show how these kinds of markets do often expose themselves to manipulation. And that's something that, as regulators, the CFTC is going to have to grapple with at some point, because one of the core rules of the CFTC principles is that markets are not readily susceptible to manipulation. Mentioned markets are one that is very clearly something that could be manipulated. In that sense, it was. I should preface that Coinbase didn't. Coinbase says that Brian didn't trade on it, so he didn't profit from him saying those words. But he obviously changed the outcome very, very visibly. So.
Okay, we're going to take a quick break here, but don't go anywhere. As in part 2, we're going to continue looking at all the nuances of prediction markets and explore what we think the future holds for them. So don't go anywhere.
Hey folks, David Breer here, CEO of 11FS. Here's something you might not know about me. I get a lot of people trying to impersonate me online, fake profiles, scam emails, the lot. And a big part of that comes from data brokers, hundreds of them, quietly collecting and selling your personal information, your phone number, email, home address, job title, all out there and all fueling identity theft, scam calls, and spam. If you've ever searched your own name online, hands up, who hasn't? You'll know how exposed you really are. That's why we've partnered with Incogni. They contact 230 plus data brokers and tell them to delete your information properly and legally under GDPR and CCPA. Doing it yourself would take hundreds of hours. Incogni automates the whole thing and keeps working with repeat removal requests if your data reappears. I tried it, and within days, saw brokers deleting my data. You can even protect your family members too. Fintech Insider listeners get 60% off an annual plan. Just head to incogni.com/fintechinsider and use code FintechInsider. And yes, it's risk-free with a 30-day money-back guarantee. You'll find the link in the description.
Zootopia 2 has come home to Disney+.
Let's go!
Get ready for a new case.
We're the greatest partners of all time!
New friends.
Gary the Snake. And your last name? The Snake.
Dream Team. New habitats.
Zootopia has a secret reptile population.
You can watch the record-breaking phenomenon at home. Zootopia 2, now available on Disney+, rated PG. And right now you can get Disney+ and Hulu for just $4.99 a month for 3 months with a special limited time offer. Ends March 24th. After 3 months, plan auto renews at $12.99 a month. Terms apply.
Okay, welcome back. In the second half of the show, we're going to think ahead to what we think the future holds for prediction markets. Emily, I mean, as you covered in the first half, at the moment, this is a very US-specific phenomena, obviously with some kind of murky grey zones about whether you can use crypto and VPNs, etc., to participate from other countries. But do you think that's going to continue to be the case? Is this going to stay a US phenomena, or do you think we're going to see an inevitable spread across other countries as well?
It's a really difficult situation, especially for the prediction markets platforms themselves, right? Because if we look at Polymarket and Kalshi, they are, like, not to be cliche, but they are betting it all on being found to be a financial platform, not a gambling institution. They want to be regulated like that and not be seen as betting. But in other countries, regulators are already taking steps to say, we see this as gambling. If you come here, you're going to have to get regulated as a gambling company. And that might be something they're willing to do eventually, but it's not going to be something they're willing to do anytime soon. Like, I've spoken to them about it, and they say this is not something that, like, we view ourselves as a regulated financial product. This is, if we start going to other countries and saying that, willing to accept a gambling license just because that's how it's set up there, it very much undermines the kind of the argument that you're making. We've seen a bunch of European countries already ban Polymarket in the last few months just because Polymarket was offering contracts on local elections. So France, Portugal, these were some of the areas. Ukraine blocked Polymarket because it was offering bets on outcomes to do with the military strikes there. Like, there's a lot of tension around how these things are regulated, but already a lot of the different countries have taken stances against it and said that it's illegal gambling. If they were to try and get licenses, maybe that would change, but they'd have to make an admission that they're gambling. That said, there might still be some countries out there that are willing to accept these as financial markets. I think the US is a very unique and specific market with how it's set up with, SEC and CFTC. In the UK, for example, we just have one regulator, the FCA, in terms of financial markets, that is. So it remains to be seen if there are countries where this kind of setup can happen. Kalshi has expanded to Brazil. That's somewhere that they're they're operating now. They're doing it through a broker though. So you don't go on Kalshi.com. You go to a broker called XP, and then they set up accounts for Brazilians via the US venue. That might be one way of expanding without necessarily drawing the ire of a local regulator directly. But it's definitely going to be, baby steps and take a long time.
Yeah. Kate, what do you think the future holds for prediction markets? If we come back to this topic in 2 years' time, where do you think we're going to be?
I suspect that they will continue expanding. Maybe they will be striking more deals. Like I know the Kalshi Brazil partnership, they're hoping that that's one of many. In the US, I will not be surprised if all of the lawsuits end up with something going to the Supreme Court, like as soon as this year. Actually, like I would bet on one of these prediction markets that's what's going to happen. There has been this like flurry of legislation coming from Congress in an effort to put guardrails up. And when Emily was talking about mention markets and how they're susceptible to manipulation, it's interesting because those are often seen as sort of one of like the more frivolous things you can do, like betting on whether Jerome Powell or President Trump are going to say X, Y, Z. But because they are susceptible to manipulation, that's something that one of the pieces of legislation is specifically trying to just straight up ban mention markets because they're seen as like these vectors of corruption. But as long as the Trump administration is in power, I don't really see the federal government changing its tune. It's just an extremely friendly environment for prediction markets right now. I don't know why they would. I don't know what would compel them to change it, especially because, Donald Trump Jr. is an advisor to both Kalshi and Polymarket, and the Trump family is planning to launch their own prediction market through Truth Social called Truth Predict. So I think it's going to go to SCOTUS, but like zooming out, I think we're going to see more expansion and probably more continued backlash, but no major, I don't think Kalshi or Polymarket are going out of business anytime soon.
That feels a sensible bet. Emily, I was really interested in the example you gave in the first half. The kind of the ice cream company that buys outcomes based on the web and stuff like. Do you think there's more growth in that kind of space for kind of business owners to kind of start to use this as a way? I mean, it sounds almost like a quasi-insurance product, right? Yeah.
I mean, that's the hope. Like, I remember I was listening to Robinhood did some kind of like event where they talked about a bunch of new products they had coming up last year. And Vlad Tenev, the CEO, was up on stage and he was talking about prediction markets because they have a partnership with Kalshi and some other platforms to offer prediction markets to their app in the US. And on it, he was saying, like, one day we kind of see these products evolving. You might want to use it as an alternative to insurance. He was kind of implying that, like, instead of insuring your home against the risk of fire or hurricane, you would just buy markets on Kalshi to do that instead for you. I must say I don't think I'm entirely convinced by that because I mean I'd have to be right a lot to build up enough of a nest egg to cover the cost of my house being burned down. But I mean that is the goal, right? They hope that these can be insurance products. The thing that's holding it back right now is just that there's not enough adoption. These markets generally tend to get most of the time maybe couple $100,000, $10,000 in volume, which is not very much at all. Some of the biggest markets can get hundreds of millions of dollars in volume, and those are credible ones. So, for example, the ones that track economic data, what will be decided at the next Federal Reserve meeting, those are very liquid and signals that we can rely on. They're contracts that we actually have pulling into the Bloomberg terminal for our readers to look at and see, because that's the kind of data that our clients would want to read, and it's data that we find to be reliable enough to show. But the majority of contracts on these platforms are still very small, and you're then much more exposed to prices going up and down, not being able to cash out your position at a price that suits you, having to hold all the way to resolution, and then who knows when that resolution could be. These are all issues that kind of make it very difficult to see insurance or any of these other kind of products or vectors becoming a reality anytime soon, at least in a mainstream sense.
Yeah, it's super interesting because in some ways it feels like there are multiple. Obviously, there are lots of challenges with this industry, with this space, which we've covered. But it feels like there are lots of opportunities as well. Right? Like this could be a great investment platform for retail consumers potentially. This could be something that helps businesses. It could potentially be something that helps traders. Like there's multiple different ways in which these platforms could be used. Like in some ways, there are almost like too many ways. Have we kind of got a bit of too much diversification in this space? Like I imagine it's in some ways it's harder to kind of really design out for successful outcomes when you've got quite a lot of different audiences who could be using these platforms in fundamentally different ways to drive fundamentally different outcomes. Kate, am I making any sense?
Yeah, absolutely. When you were saying that, I was just thinking about what Emily was talking about with the hedging opportunities, which is like basically an insurance policy. I've talked to some financial institutions who have been describing how like energy companies are already participating on these markets, hedging, for example, on like oil prices and solar adoption. That is happening, and it's limited right now in a lot of ways because there's not trading on margin available on these platforms. And until that happens, there's only so much money that companies or individuals are willing to just put up the whole 100% of the money into the market. So like the lack of margin is a big limiting factor right now for like bigger players. But I think once that's solved, this could become like a real hedging tool in that space. When it comes to like individuals though, like hedging on whether there's going to be a natural disaster, a federal official recently was, as like a example of why these markets were good, said, oh, well, someone could buy contracts on the outcome of a drug trial to sort of protect themselves against the possibility of getting sick. Like they were talking about it as like something that could potentially be woven into our approach to affordability of healthcare. And that struck me as frankly insane. And I don't think that there will ever be enough liquidity where people will be able to effectively hedge their financial risk on individual drug trials. So some of the conversations that are happening around the opportunities for these products are like kind of silly in my opinion. But at the same time, I think we will see hedging, especially once margining happens.
And also just on the like diversity of what's on offer, as you were saying, Kate, like there's so many markets available. There are so many markets available and such niche little differences between each of them that it can be difficult as a user to decide which one is the signal I want to pay attention to, which one is the one I want to trade on. We did a story earlier this year when Trump was kind of threatening to buy or annex Greenland in some way on the different markets that were being offered across Polymarket and Kalshi. And there was ones for like, if he buys Greenland, if he leases part of it, if he seizes it by military force, if he forges an agreement that has part of those things but not all of them. Like there are so many different small things that can affect an outcome that then means there are markets on all of these different small things. And that can be incredibly difficult for a user to kind of pass, especially at kind of the retail individual level. Even today, looking at what Polymarket offers on Iran, which is a controversial topic, the fact that they even offer these markets. You can bet on whether or not Trump will send in forces on the ground. You can bet on when there will be strikes. You can bet on when there'll be a ceasefire. You can bet on Trump just announcing that he's reached a deal. Like these are all tiny little things that knock on to one another, but trying to figure out what signal you get from them is incredibly noisy.
Yeah. No, it's exciting and scary in like equal measure in a way, I suppose. Like at the moment, who gets to decide what can be a market and what can't? Like, as in, who's responsible for setting the boundaries? At the moment, it feels fairly Wild West out there. I think Kate used that phrase. Like, yeah, it is crazy, that you can kind of just place a bet on the outcome of a conflict that's currently happening, that's impacting people's real lives and is genuinely life or death.
Yeah. So right now in the US, the CFTC has rules about what kind of markets you can offer. You're not allowed to offer like a death market or an assassination market. You're also not allowed to offer markets on onion futures and box office receipts due to like some arcane parts of the commodities-related law. But there are rules. The reason that Polymarket is able to offer contracts that are sort of indirectly tied to death and war is because that's happening in its offshore version. And like the CFTC isn't going after its offshore version. It's not really being regulated. And so they have a lot more leeway to like dip into these more controversial spaces, whereas Kalshi is trying to abide by U.S. law, so it's not going to be offering quite as controversial a menu of contracts.
But in short, it is up to the companies, right? Like the companies decide what they want to list. If you're a US regulated venue, you put up a notice to say, I'm going to list this. The CFTC has 24 hours to dispute it. Generally, that doesn't happen. But the companies decide. That may change at some point. Polymarket has flagged that it wants to introduce a way for users to deploy their own markets one day. You can already kind of send them an idea and see if they take it, but eventually they want to get to a point where any one of us could just put up a market and it starts trading, which is probably a recipe for disaster. But, it's a permissionless world.
Watch this space, yeah. And Emily, what do you think the opportunity is for fintechs in this space? Obviously, we've got two very dominant players in Polymarket and Kalshi, but are there opportunities here for fintechs to get on this train?
I mean, yeah, we spoke about Robinhood, right? Like that's a good example of a fintech that has chosen to jump on this train, and some of the crypto platforms have also done that. So Crypto.com was was actually the first regulated exchange to offer sports bets in the US in 2024. Coinbase has bought the rights to an exchange so it can offer its own prediction markets at some point. A lot of the players are now starting to move into making this part of their stack, because we've been talking about it for years, but everyone has the dream of being a super app, right? Like all in one, everything in one place. Revolut kind of started that, and then now it's become the tagline that we hear from every company in fintech. And prediction markets are surely part of that. So as we kind of move into this space of everything becoming the everything app, we're going to see prediction markets as a core vertical within that, especially in the US.
Yeah, it'll be interesting to watch play out. And yeah, we've seen fintechs like Monzo introduce gambling blocks. Kate, do you think that prediction markets should fall into that same category?
I'm going to leave that one up to the courts.
I think it's interesting though, because Kalshi does say they do have some tools on their platform to try and protect users in that kind of sense. Like they have ways that you can limit your exposures. They have ways that you can put these things on yourself. Doesn't necessarily mean they go to the full extent of the UK it gives us a bit of a biased view because we're so used to having massive protections around gambling. We have very, very large charities, and most of our banks now have gambling blocks that you can impose on yourself so that you cannot send money to a gambling platform. Like the US doesn't necessarily have that set up. So Kalshi is kind of already trying to integrate some of that. Polymarket, not so much. But then, as Kate was saying, like the US venue that's regulated for Polymarket is not very big. So we don't really know what that looks like yet. It's still very young. But whether or not we'd actually see fintechs trying to incorporate prediction markets into that, it's kind of hard to tell, because if they're regulated like a financial product and they're not, and assuming they win all the court cases and the Supreme Court says, yeah, you can stay with the CFTC, it'd be very difficult for a bank to say, well, that's something that you should have, that should fall under our gambling block rules, for example. But if you send money to the CME to buy oil futures, that's fine. Like you kind of introduce this like weird dichotomy, and it requires companies then to make a judgment call, which they probably aren't comfortable making.
Yeah, no, I think it's really interesting. I mean, look, I have lots of conversations with people who work at banks, at fintechs, and they're constantly looking for examples of journeys or propositions which are really engaging customers and are giving customers kind of good, positive experiences with their money. And I think in the kind of on the happy path of prediction markets, like you can see that this ticks a lot of those boxes, right? Like it seems outwardly simple, it's interesting, it feels relevant. It's real time, it's dynamic, it's social. Like it's got lots of kind of the components to it that I think lots of banks and fintechs are looking for when they're trying to really think about how they can make their platforms more engaging, how they can kind of win a bigger share of their customers' kind of financial life. So I can imagine there are lots of people sat in financial institutions right now who are kind of feeling very torn, like actually kind of seeing this and wanting to kind of potentially kind of think about how it might or might not integrate into what they do, but also kind of not quite knowing what the next step is to take. Like, I mean, Kate, obviously we've seen some investments in platforms from stock exchanges, but we've not necessarily seen any of the other kind of big banks. Well, I've not seen any of the other big banks dip their toes in these waters. Have you seen anything? Have you started to see any of the kind of US big banks investigate this sort of space?
Well, as Emily was mentioning, like not banks, but like ICE that owns the New York Stock Exchange has invested in Polymarket, which is interesting because Polymarket's sort of like the bad boy of the two, and Kalshi's like the more law-abiding citizen. We are seeing different players that are perhaps more open to risk jumping in, like Susquehanna, Jump Trading, which is in Chicago where I am. I think that we're probably going to have to see how some of the court cases unfold before we see the biggest players really jumping in with both feet. I don't know. Do you think that's right, Emily? I feel like I might be wrong.
Well, no, that's totally right. And I think we have seen the banks kind of partially take a stance in some ways. So several of I think there was a story that wasn't by us. So reportedly, JP Morgan has said that some of its traders shouldn't be allowed to trade prediction markets on their personal accounts. And then we've done a story about some of the hedge funds doing similarly. So Point72 and Balyasny both kind of issuing similar edicts. And why that's interesting in terms of a stance is that typically your personal account is something that your bosses don't make edicts about. It's something that you can do in your own personal time, but they don't tend to set limits on what you can do in that sense. So by putting it out there and saying you shouldn't be allowed to trade prediction markets on your personal account, that's saying these are things that we don't think are appropriate for you to be touching as a trader who's experienced in this area. That is somewhere where we have kind of seen them get involved. But conversely, I think there have been examples of earnings calls from several of the big financial institutions where they say, we look at prediction markets for the data. We think it's interesting. I've heard of big banks where they have desks of oil traders who will watch Polymarket on the weekend because oil futures are closed, but they won't trade it. They won't touch it, but they'll look at it just to kind of get a sense of where things are going, how things are performing over in Iran, especially right now. So from the data perspective, they are very interested in that. And that was why ICE invested in Polymarket in the first place. They see an opportunity to distribute that data to their clients in a much more uniform, accessible way for a hedge fund than, clicking on the website the way that the rest of us do.
Yeah, it's going to be so interesting to see how this all plays out. Okay, we've sadly come towards the end of the time. I suppose to give you guys one last contribution on this. If you could change one thing about prediction markets to make them a more positive force for financial services as a whole, what would you change? What would you like to see differently? Kate?
So this is sort of an oblique answer, but I really think that these markets need to take KYC seriously, especially when it comes to underage participants. I'm going to tie this back to the financial thing because if there are a bunch of 17-year-olds, even 18-year-olds who are technically legal, but losing all of their money and harming themselves, financial institutions are going to stay as far away as possible. There needs to be some better safety measures in place so that these are friendlier environs for institutions to really take part.
Yeah, absolutely. Emily, what about you?
Yeah, I think it's also, I always go back to crypto in terms of as I was saying earlier, the difference between Binance and Binance US, FTX and FTX, and that being the way that we're looking at Polymarket right now. I think that what we did see was that authorities in the US started to take action against those offshore platforms where they felt like they had jurisdiction to do so. Right now, the situation in the US is that we don't see a lot of enforcement action against crypto companies anymore. That's the case at the SEC and it's the case at the CFTC. There's not much of an enforcement division left under the current administration, which probably means that we're not going to see any change on that anytime soon. But that might change, right? That might become the case eventually. We may have a change in power where we have Democrats back in power, so the administration changes. Or there may be, a blow up like FTX that kind of forces the industry to reckon with itself in a way that we haven't seen yet. And these are all things that will impact whether or not financial services feels comfortable getting involved because as much as we like to say that prediction markets are a regulated space with the CFTC overseeing them right now, so much of that volume is happening offshore in an unregulated manner. That's something that financial services firms just can't tolerate. So until we kind of get an answer to what regulation looks like in this space more broadly and kind of see much more of the volumes happening in the regulated space rather than in the offshore one, we're not really going to see massive entrance in that sense.
For sure. Okay, well, I feel like we could talk about this all day, and I feel like we're going to talk about this a whole lot more across the rest of this year and beyond. So, but sadly, that wraps up today's discussion. Where can people find out more about you both, Emily?
You can find me on X at Emily J. Nicolle, or you can read my stories on Bloomberg or on Bloomberg.com and on the terminal.
Absolutely. And Kate, what about you?
Yep, you can read my stories at Wired. I'm on X at Knibbs, my last name, or Blue Sky at Kate Knibbs. Or, just Google me.
And you can find me on LinkedIn, Kate Moody, or you can drop me an email, kate@11fest.com. Thank you for listening. If you like what you've heard, follow our podcast and don't forget to leave us a review. It helps us to make the show better and helps others to find the show too. As always, if you want to join the conversation, find us on social media. Just search for 11FS or Fintech Insider, or you can email podcasts@11fs.com. Thank you very much. Goodbye.
Security program on spreadsheets, new regulations piling up, and audit dread? It's time for Vanta. Vanta automates security and compliance, brings evidence into one place, and cuts audit prep by 82%. Less manual work, clearer visibility, faster deals, zero chaos. Call it compliance, or call it compliance. Get it? Join the 15,000 companies using Vanta to prove trust. Go to vanta.com/calm.